In today's video, I'm going to run through the exact profits that I made in my first live month as a funded trader. The account balance was at $200,000 to start, and on the screen I'll put some stats up now to show you the exact profits, strike rates and returns that I got. So as you can see, the strike rate was 25% with 1 winner and 3 losses. The first trade I did a 0.5% risk, and then I upped it to 0.75% thereafter, which resulted at the end of the month of April at 1.75% profit, and in dollars that was $3,600 plus before any profit split with the company. So this is my first month. It's a 25%, 75% split. So they take a 25% cut of profits and I get to keep 75%. What I'll do is I will run through one of the losses that I encountered this month, which was a very unfortunate one. I was took out by less than a pip, and then it went on to hit my take profit for 5R, and then I'll also run through the winning trade as well, and at the end I'll show the proof of how much I lost during my losses and how much I ended up making when I won a trade. Okay, so here's the 4-hour time frame of one of the losses that I took during the month of April on the live funded account. So I'll just quickly run through the basic analysis, which you can see here we had a 4-hour breaker structure to the upside, meaning that we were bullish overall. We reacted from a daily supply zone, and you could see a pretty strong V shape from here, and we also got an internal breaker structure here to the downside. Now we're sort of ranging a little bit and reacting from daily demand. I also like to use the fib retracement tool to judge whether it's right to buy or right to sell at the time, and as you can see we're within discount pricing, so buying from here would make sense, and obviously overall the swing bias on 4-hour is bullish, so everything's aligned for a buy. Okay, so now here is a 15-minute zoomed in chart. So basically what happened was, at the time the 15-minute had switched bearish, and after seeing the 4-hour internal bearish breaker structure, I was happy to look for shorts once I'd seen a full body change of character for me in this situation. We had an extreme supply zone up here, and then we had another one here. It's not highlighted because we reacted from it here, and then we saw that full body change of character that I wanted to see. And my entry was on the supply zone, highlighted by this box here, which was supply left unmitigated following this change of character. So we got tagged in and we ran to about 2.5%, maybe even 3% profit before then retracing to the upside, and you can see we got tagged out by 0.3 pips, and then it ran down to our take profit region. These do happen every few months. It is quite frustrating, but if you'd have watched my video when I passed the challenge, I had one which was pretty lucky that I stayed in as well, so you can expect it to work both ways sometimes. Overall, my stop loss is calculated off of averages built up over 18 months, 2 years worth of data. So, you know, this to happen for the first time in a 4-month period is not so bad. It was frustrating at the time, obviously, but it didn't really affect my psychology. I was just waiting for another opportunity to enter in the markets at a later date. And now I'll go on to the winning trade of the month and break that down a bit. Okay, so here's the 4-hour time frame of the winning trade that I took. So it's quite similar in a way to the one I'd just been through, except obviously it's at a later date and we've come to a more extreme supply zone. When we had that internal breaker structure, we left this unmitigated supply here. It's quite a refined one, and it is still within that daily supply. However, overall swing bias is still bullish. So when interacting with this originally, I wasn't interested in a sell because I thought we were going to break to the upside. However, we started to sort of see a range, and here we saw a bearish close, still respecting this 4-hour supply zone and the daily supply zone, but it grabbed liquidity from both of these points, which then said to me that we were looking for a push to the downside and we could at least target this sort of area here before price may push lower to the downside. So now I'll jump onto the 15-minute time frame and go through my thoughts before my entry. Okay, so we're on the 15-minute time frame. As you can see, I labeled this up quite a lot. We were bullish on the 15-minute time frame in terms of swing bias, but this 15-minute breakup structure to the upside did not break the 4-hour supply. Did on the 15-minute time frame, but it's important to note that 4-hour, this was just a liquidity grab, and actually this supply zone has still been respected on high time frames. So this is what I wanted to see minimum, either a bearish full body change character or a 15-minute IBOS for extra confirmation. As you can see, we've got the full body change character to the downside. These two doji candles here were the supply area left behind from this change of character, and because the region was over a certain size, I wanted to enter off the EQ, which I placed an entry here. As you can see there, we got wicked in. I did a little bit of a breakdown here of a good insight into my plan and how I monitored the trade and when I took my profits. As you can see, we ranged for a little bit, and then I think there was news and we came back to our entry point and dropped quite a lot. One thing to note here is that a lot of traders don't test the 15-minute time frame enough, and once the 1%, 2% in profit, they like to change their entry point to break even, so they don't have any stop loss. But if price comes back and tags them at their entry point, then they get taken out for no losses but no profit either. And this is a good example of why I don't do it. We see this retracement, news release, taking out all those traders that move the stop loss to break even, and then we shoot right down within a 30-minute period to our take profit zone for 5R. Here is a breakdown now of the trades I took during April that I've shown. So we can see here our first loss was at a 0.5% risk, hence the $1,000 loss. Then 2 more trades at 0.75% risk, which is why it was around $1,500 loss. And then on the 27th of April, we executed our winning trade, which grossed us $7,500. And you can see I did a couple more trades here, just little 0.01s. I didn't realize at the time, but you have to have a minimum of 10 trading days in your first month live on My Forex Funds to be able to become eligible for your first withdrawal. So that's why there's a couple of 0.01 trades just to satisfy that. And this pretty much wraps up the video. So April was a pretty tough month, especially for going in for my first live month under the $200,000 funded account. It was just quite a slow one, really. There's a couple of bank holidays, so that doesn't usually help, but ultimately I got a decent profit at the end. And obviously you get a refund and a couple of little bonuses that add up to a few £100 for obviously passing the account and hitting the targets on phase 1 and phase 2. You get a little bonus. And yeah, I'm looking forward to seeing what May brings at the end. We're obviously halfway through now. It's been a pretty slow month, but it was to be expected because we had some large news events at the start of the month. Hopefully the second half kicks off a bit more. So I hope you enjoyed this video, and if you did, please leave a like and be sure to subscribe, as I will be continuing uploading videos so you can stay up to date with how I'm doing on my funded accounts, and it gives you an insight into the prospects and what it's like to be a full-time trader. I'll catch you in the next video.